Welcome to Momentum Monday. Today is June 5th, 2022. Howard, I hear you're traveling again. What's going on?
Time to work is during bear markets. Although looking at the Apple chart here that you got up, it's not a bear market.
I mean, it's a monthly chart, obviously, so still
Yeah, but
down
I mean,
so much,
Apple is executing.
20%.
Wow. Yeah, is it down 20? Yeah.
Yeah, it
Wow.
is. I mean, that's normal in a longer term perspective. But this is like monthly chart with, this is
Well, Apple is
the
the
20
U.S.
months.
economy. I mean, Walmart, we lost Target, so Apple's basically the U.S. economy. Even Walmart, though, it's a blip.
On a monthly, everything is a blip. So, but if we go on a
Not
weekly,
my
everything,
age. Not my age. Every month now is compounding at a death-defying rate, Ivan.
maybe,
Yeah.
yeah. I think I think you butt dialed me on Monday. Like by mistake, you tried to call me, and I was listening to something for 30 seconds. You didn't say anything, so I closed.
Yeah, that's what I
Uh,
do sometimes, just butt dial people. And what does
yeah,
that have to do with Target?
nothing. So let's talk about the market. So I think with the indices, obviously it's still in a bear market. Well, not obvious, but that's what I think. But currently trying to rally. It's anyone's guess how long this bear market rally is going to last. It could be a few weeks.
Hmm.
And they're currently digesting gains kind of constructively, especially considering the market reaction to news. Because last week we had like a big juggernaut like Microsoft. They cut guidance, citing forex
They blame
impact.
the US dollar, right? A little bit?
Yes, and they gap down and finish up. The QQQ, gap down and finish up like almost 3% on that day. To me,
Yeah.
that's positive reaction to bad news, which is a huge testament of improving market sentiment. And on that same day, we had the IPO ETF up 8% or more, and then we also had the ARK ETF up 8% or more. Obviously, they gave back half of it the next day after
Yeah.
the jobs report. Jobs report continued to be super strong. I mean, let's not forget, usually jobs are a lagging indicator. So,
Yeah.
but currently what's like that initial market reaction is basically showing that maybe what's good for the economy is not good for the stock market, because it means that the Fed can just continue to raise interest rates and continue to shrink their balance sheets. But overall, I think it's somewhat constructive digestion after that big move, and now we're just going sideways. Maybe
Yeah.
it'll try again another upside move to test the 50-day in the next couple of weeks or so.
Yeah.
And hopefully the price action is not like last summer. Last summer was such a snooze fest. After the GME and AMC kind of went up a lot in end of May and early June. It was kind of sideways action last year in the summer. Nothing was really going on. Maybe just the vaccine stocks at some point, they went up. It was
Yeah.
just nothing going on.
Yeah.
So what are you seeing in the market right now?
Well, I mean, this is why people allocate to people like yourself, or this is not a market for me. I'm done being bearish. I think last year I wasn't short anything, but I was like selling and waiting, and I was underperforming. And then this year is just no matter what you did, you're under, unless you own energy. So it's not like I'm some genius, but I'm done being negative, right? Like everybody, it's out of the bag. Inflation's going to 1,000, oil's going to 200. No one's talking about oil going negative again, so that's good. No one's talking about doing a growth round in tech. That's good. I mean, that's how you start a bottom. That's not the kind of discussions you have at the top. The other good thing about tech, I don't know about the rest of the world as much, is there's no secrets, right? Tiger's down 50%. Everybody's making fun of him. Venture Sequoia writes a letter saying you're dead. Everybody's in real time telling you how fucked you are. So that's good. It's not like the old days where you're just one cockroach at a time. We kind of know how silly things were, and from I'm guilty as charged too of getting in the SPAC game, but smart people will figure out stuff. So we're at a better spot than we were last March. It's not fun to look at your statement. It's not fun to look at the markets every day, but that's what investing is, hard. So I think now we're at the point where a lot of the froth is gone. So now you're going to start seeing, you think it's bad for Robinhood. Wait till you see all the companies shutting down that were trying to compete with Robinhood, right? We don't have 6 billion in the bank. You know what I mean? So you're going to just start hearing quiet fadeaways. And if you look at Snapchat, the amount of resumes times 1,000 of these companies were employees. So there's going to be a lot of new movement, which is good for the economy, right? Not everybody can make 300 grand a year doing nothing on Zoom, coding NFTs. So again, I'm done being bearish. Doesn't mean the bear market can't just continue to do damage. And obviously, Ivan, as I know, inflation is an issue, and I see it in the flight. I flew coach. The one treat that I give myself is flying business class to Europe a few times a year, and it's silly. I'd
How
rather
much did
just
you
spend
pay?
it on. I didn't pay. I went coach or premium economy because I'm not paying 12 grand to go to Europe. So there's a limit to everybody in their budget, no matter where you are in the food chain of what you will pay. So you put up with things, and everybody's making their weird changes, from my son, who's figuring out he didn't take his car to Montana this summer, freeload versus driving everybody around and being the nice guy and paying for everybody's, gas and travel. Some of these won't come back. Carvana is like a walking
Probably, yeah.
dead company. That's just, and if you look at the warnings, let's go to Carvana. So say you had a warning in 2020, obviously, and so I don't know who was the genius that bought that and rode that all the way up. But I've never seen charts like this. Have you seen charts like this? In '98, maybe '99, but
I
where
mean,
you
most of the
just
companies that
they
were
were out of business in March of 2020. Then they were taking over the world, and now they're out of business again. So you got that chart for Peloton. So there's a good point, Ivan, and there's not much to say. You have the same thing with Peloton. You could have the same thing. You won't have the same thing with DocuSign. So let's go look at DocuSign because they have a business and a product, but the charts all look the same. So now, like I said, this is now that part of the bear market where you have to do some work, and you're going to find some great companies. I'm not saying it's DocuSign or it's Zoom or it's Elastic or Coinbase or Robinhood, but not all these have bad business models forever, right? Carvana was selling cars at a loss no matter what. And I guess making it up on volume wasn't enough. Peloton is a very complicated hardware business, so it isn't fun to run in a bear market where people are just not going to want to pay $2,000 for a bike. But there was plenty of, you didn't have to get out at the top. I remember selling this in the 60s on the gap down, giving up finally. You get warnings.
I mean, you can use the 50-day, the 200-day, worst case
I didn't
scenario.
even sell it until
Yeah.
in December. And, I was writing up my last little bit of stock, but, there was warnings. At worst case, now people can look back at charts and have some recency bias. The recency bias from this carnage will help the next bull market because a lot of people will go, I remember 2022, and they'll sell stocks much quicker on the way up. So this helps the next bull market is you're starting to see the breadcrumbs of how the next bull market is formed. What we need, Ivan, and this is for sure what we need, is you need good macro conditions. You don't need $200 oil does not help. $120 oil does not help, and you need interest rates the expectation of interest rates to kind of level off somewhere. Everybody can get by with 3% interest rates, trust me, even 5% interest rates, but they can't have 5 one year, 10 the next year, 1 the next year, because people won't put money to work. And so I'll let you finish up. Are you seeing any strength? Walk through where you're
I mean, crude oil, obviously, and natural gas are the strongest, and those two sectors have been the leaders in this year. And especially in the past couple of weeks, we're seeing acceleration in those trends. A lot of those stocks are up 20, 30% in the past 2-3 weeks. And they kind of start to feel like the safe place to be. But obviously, they could be a rug pull just around the corner. All it takes is...
You with the rug pull reference. Look at you.
All it takes is just lifting the oil embargo on, let's say, Venezuela or Iran, and we'll probably see a 20-30% drop, which it's not out of a question right now. And
and those 20 to 30% drops are real. They're not growth stocks, so those really hurt. So people really got to be careful of those pullbacks, because you don't make it back as quick.
So there was a decent acquisition on Friday, and obviously not a big company. It was TP Turning Point. It was acquired for double their market cap, which kind of spurred some speculative juices in the entire biotech sector. It was up 3.5% on Friday when the Nasdaq was down more than 2%. So
and I think if we're going to rally, Ivan, this is where you get the rally relative. People will sell energy and healthcare for the summer and buy biotech. Again, I'm not trading that way because it's just I'm not good enough. But I think if you get a bounce, it's going to be in software. It's going to be in biotech. Any good news, people will look for some alpha there. And like you said, they've stopped going down on bad news for the time being. Doesn't mean it won't resume. It's a bear market, but
exactly. But this is the first step. Stop going down on bad news. This is definitely the first step.
Elastic gap down on their number, then closed higher. Zoom gap down and closed higher, but not everything. So it's a stock picker's market.
Yeah, definitely. I mean, at least correlations are starting to come down, and stock picking start to matter a little bit more. And if you're a short-term trader, there's some decent opportunities, on a 1 to 5 day horizon, like short-term swings. Look at AMD, for example. 100 used to be resistance. They went above it, consolidated above 100, above its 50-day moving average, and then it tried to break out on Friday. So I wouldn't be surprised if they try to maybe test their 200-day in June.
Yeah, but when did it cross to the negative? That was in January. So it took 5-6 months to get the trend somewhat, or at least the moving averages flattening to moving up. That was brutal. That was a brutal pullback. But what a run. If you go back on the monthly, what a run.
Yeah, definitely. I mean, it used to be like a $2 stock at some point, so $3 stock in 2016.
So it's just, you want to be in position to catch a few of those the rest of your life, and that's what surviving a bear market gives you the opportunity to do. Okay, well, I'm going to go to bed.
All right, Howard. Have a good night then.
Everybody have a great week.
See you next week. Bye.